If we look at Fed Watch, we can see in their next meeting, there is basically no chance of them cutting. And the meeting after that is still an 81% chance that they will not cut. And the reason for that will be because oil is spiking and this puts pressure on inflation. So what may end up happening is if the S&P continues to show weakness, we could end up potentially retesting certain levels. The first level to watch, I would say, would be around 6,500, since this was a level where we first bounced in October of 2025 and against bounced in November of 2025. If we do end up going lower, the next level I would be watching is around 6,100, since these were where we first sold off back in February of 2025. This would be a much deeper correction, and from the top that would be a pullback of 30%. So if we do end up getting something like this, which definitely is harder to predict such large pullbacks in the S&P, but if we were to get such a large correction in the S&P, this would allow the Fed to potentially cut rates, since if the stock market goes down so much, that would allow inflation most likely to start to go down, and the Fed would potentially have to intervene, since unemployment would also at that point probably be going up a lot, since when the stock market crashes this much, that would mean lots of companies will start to lay off people, and the more companies are laying off people, the more that puts pressure on the Fed to cut rates, and the more people get unemployed and don't have jobs, that causes less people to be able to spend money, and that also causes inflation to go down. So we might need to have a larger stock market correction so that we can see CPI go down as well as unemployment go up, so that the Fed is able to intervene.